Welcome back. We're about to go straight to the interview. I have Ambrose Omodion online on Skype to tell us more about how the stock market actually, performed this week. Hello, Ambrose.
Yeah, actually, the first 20 week of October has been a very bullish market, and it's expected, being the last quarter of the year, this is just the beginning, knowing that in equity investment, third quarter results are very important to every investor or trader because it gives insight of what's expected of the company at the end of the year, especially in our market where many listed companies have December at their year end. That means we expect more third quarter results to be in the market in this month of October. That's why it's called earning season month. And when the numbers come and they beat expectation, the trend we have seen so far, right from the first trading day of this month, the yesterday, have been a positive market. For me, it will sustain the trend. But nevertheless, in any market that is going up, expect a pullback at any time, especially when investors or traders want to take profit. And it's part and parcel of market anywhere in the world. Pullback and profit taking is part of the market. That means this market have rallied for straight 6 days now. For me, I'm not surprised I see market pulling back today being Friday for profit taking or next week because we expect the early filers of the companies on the exchange to start hitting the market from next week. And if the number maintain a positive trend we saw in first quarter, second quarter, and also looking at the economic data that are coming that are positive, despite that the recovery is good, I will tell you that economic data we are seeing so far have been positive to give us an insight what we expect on the economy. Only just that the foreign exchange market has kind of put a lot of investors in a tight position because most companies that really depend on imported goods will be hit by this crisis in the money in the exchange market, in the foreign exchange market. Because as we speak now in the black market, dollar is almost around 575, 580. That means those that are going to go outside the official rate to import either their raw materials and all, this cost will hit their profit line, and at that time they have less to pay investors. And also those that are importing also with this kind of high exchange rate, they are not naturally importing inflation into the economy. That means this high cost of importation might also impact our inflation that has been on a decline for 5 months. Let's wait and see the end of the month of September inflation figure before can conclude. But I'll tell you that this high exchange rate is going to kind of impact inflation to go up after it has declined for straight 5 months. These are what we are seeing. But for the market, I'll tell you that the market is still on a track of positive outing. And that is expected.
Now, Ambrose, I wanted to ask you before you even mentioned it. The Forex market seems to be on a tipsy-topsy situation at the moment. The Naira has continued to go down against the dollar. So you have spoken briefly about the impact of this to the market. So what do we expect, even though the market is on a positive trajectory?
The market movement is as a result of a pattern. If you look at the history of Nigeria stock market, because we have the data and invest data, we have seen that the month of October is most only on 50-50 the positive outing for the month of October, being the earning season. But it depends on the numbers of the companies that have been released to the market and also liquidity in the market at this time. But we are seeing that gradually the funds are leaving the fixed income market to equity market, and I expect that will keep the market on a good direction. But as you just asked about the exchange rate or the dollar and the Naira, for me, I've said earlier that it's going to impact on some companies that have not done what we call backward integration. Those companies that depend fully on imported raw materials or imported things for their production, because they are sourcing it at a high cost, it might also eat into their profit. But for those that are really have done backward integration in Nigeria here that are not importing anything, I will tell you, their profit they posted in the last quarters might likely maintain that trend because nothing has changed in terms of cost. But for those that are depending on imported materials, I'll tell you, their profit after tax or their profitability level for the third quarter might be looking down because this of this high inflation, high exchange rate, and Naira devaluation.
Now, Ambrose, there are so many companies that depend on importation of raw materials for their products. and services. And so we're looking at the dollar continue to affect a lot of companies out there. So is there going to be any form of a ripple effect on their market prices in the stock market?
Yeah, no. When there is inflation, and there is this high cost of exchange rate, it's going to eat up the company's profits. But when there's inflation and these companies are not doing no importation, they sell their materials right here in Nigeria, inflation will be a plus on their price on the exchange. But for those that are important because of their high cost of importation, even as inflation is high, when they increase their price, because their cost is high, they will get little margin from their activities. On that note, when they reach their number, market might not react much to it. But those that are not doing importation, that have done backward integration before now, as inflation is going up, I know most of them that have essential services, they can equally adjust their product in the line of inflation. And because their cost of production is low, you see that their profit will be high because they have increased their price, and also the cost of production is low because they are not importing anything. But that's why, as an investor, it's time for you to sit down and look at the kind of company you are investing now. It's a cycle. We know that with time it will change. But for now, in the market, those companies that have done backward integration and also their services are essential, and even when they increase the price of their product, they're not going to affect their sales. That is where investors should be looking at, because as we speak now, as they increase the price of their stock, their earnings will also come up. And when they reach this number, they're able to pay good dividend, and also this number will attract new investors into that company. That is where investors should go now. It's not a time for them to panic, but rather to take what we call intelligent investment decision by seeking information and also looking at where the economy is going. And also their investment goal is very key. If you are an investor that you are investing for dividend, you are investing for capital appreciation, you should know the kind of stock you should put your money. As I said earlier, if you are investing for dividend, you look for those companies that have done backward integration, and also you know that now there is inflation, to hedge against inflation, you look for those companies as they are adjusting their price up, they're going to make more profit, and their cost of production, because they are not importing goods, cost of dollars will not affect their cost of production now. That means all will come as a form of a better earnings that will add their. At the end of the day, they pay investors a good dividend, and that will now also support the price. Like I always say in analysis, that earnings of any company, whether on the short run or the long run, has impact on what of any company. That means if you are doing well on the long run, going to reflect on your price. If you are doing badly on the real market, going to teach you that your price will start going down. For those that are really depending on imported raw materials, for now, investors should also rethink, to go around such companies. But for those that are in banking sector, we're seeing improved activities in the banking sector here over in Nigeria. And as a result of why, I'll tell you why is it that people are looking at it, because we've seen that now that the oil price has sustained a trend and remain above $80 per barrel, that's going to be a plus for our banks and also our economy, especially at Nigeria external reserve have hit 21 months high. Then also the banks that have before now made provision for bad loans according to regulatory move by CBN. Now that the oil sector are recovering, knowing that our banks before now are highly exposed to oil and power, and we're now seeing that now the oil sector are not coming up, oil price now coming up, they're going to come up, kind of get back their loans that they make provision as bad loans. And then they kind of
Ambrose, sorry, I would like to ask a very quick question here now. Now, we might not see the fall of, or rather the appreciation of the Naira anytime soon against the dollar. That may not happen. And companies, investors will continue to want to buy into shares, to buy shares. Now, you talked about companies that are sourcing products, their raw materials from the country, and may not be affected by the depreciation in the Naira or the challenge in the forex market. So what do you advise those who are still, sourcing their products outside, and what do you advise the investors to do?
Investors naturally, as I've just said earlier, you have to read. That is why your investment goal is to make money in the market. It's not to come and look picture and hold a stock like wife. No, you are in the market to make money. Now that I see that there are some companies that are affected by the higher exchange rate, then you look for those companies that are going to benefit from the exchange rate, because there are some companies that have done backward integration, like I've said earlier. Look the way of those companies that the earnings will be good and they pay good dividend from their earnings. Then it's where you invest. You don't say because you're in Nigeria, the FX is affecting some company, and you not stay put in that company. No, you are in the market to make profit. All you just do now, you reposition your portfolio to align with those companies that have done backward integration, where you know that the exchange rate will affect their dividend, will affect their earnings. That's the simple thing that investors should do.
All right. Yes, but you know, for companies to be able to meet up and all that, they will have to somehow not think about their losses and then find a way to, you know, come back and then so that investors will continue to invest in them. But you know, looking at it critically, yes, the first, second, and this last quarter of the year has been a bit good or something, looking at it from, you know, till September. But we're now in October, heading to December, yet diesel prices have shot up. The dollar, the naira against the dollar is still low and is still being crushed. We do not know what is happening. What exactly do you think will happen? Let us look at what might happen, say, in the first quarter of next year.
Actually, anywhere in the world, we know that the last quarter of the year is the most active quarter in terms of activity because of activity associated with the quarter and some seasonalities associated with the quarter. Then we are already seeing happening in the market as we speak now. That means you know that people that have been lazing around before now, because of this last quarter, because of strategy, they want to come out. That's why we are seeing activities here and there, which you know are going to reflect on the GDP and all stuff. But for next year,
excuse me, Ambrose. Now, the last quarter of the year, activities are bound to come up in the stock market, and everybody is rushing. Usually people want to make plenty profits at the last quarter of the year. How do we now use that to equate what might happen next year in the first quarter of the year, considering the way the Nigeria economy is right now?
Actually, for what I say, it is no. I would say to the who goes to this government for the last 5 years, being regular in releasing their budget. Now, yesterday they passed budget, and I believe that before end of December, no, they presented budget yesterday. By before end of the day, it will pass by the National Assembly. If that is done and they are sent by the President, we'll see election in 2022. And also, being election pre-election year, investors know that the earning season, the peak earning season of any market, especially our own market here, is that first quarter. That is where you see many companies paying good dividends, especially those that are paid interim, they pay their final, and most companies that have December year-end announce their result. That means the people will be targeting the first quarter of the year. But after that, they might try to, so let's go money, roll back our fund and watch what is going to happen in the economy. But I tell you, you know, at times, pre-election year is either here and there. Pre-election year is the year that we'll see more money spent in the economy because political activities will be here and there. But how, something that we don't know now, because if the politics is hit up, there might be fear, uncertainty that people want to put their cash, that will put the market down for. No, but don't forget that the election is 2023, not 2022. But being pre-election year is two things. It's either there's liquidity in the system because of what the election, parties will be spending, government will be spending for the election and all those stuff. Then that might also trickle down to the market and the economy. But it depends. If they see that there's a lot of uncertainty because of insecurity here and there, that might also change the narrative of the economy. That's why I cannot just give you an outlook like it is positive, it's negative, but I expect a mixed trend in the first quarter of 2022. And because of being a pre-election year, that's why I see it, because we can't now preempt from now that yes, if insecurity improves and the government will to reduce it and will start in a little improvement, fine. But it depends on government policy and the way they go about it, especially